Hey guys, Mike here. So yes, I did run across the story, which I'm going to share with you, and it did include a stock. When I looked it up, I was shocked that it returned 469% in 21 months, and it is not a tech stock. It has absolutely nothing to do with the tech industry. And so that was very surprising. When I find something like that, I like to share it with you for those who want to learn things like I do. And I definitely learned a lot researching for this video. And so one thing I've been trying to do is find things that, one, aren't tech related, but also things that we just can't live without. Like no matter what's going on with the economy, these stocks need to be somewhat stable or going up, right, over the long term, right? Not every day, but over the long term, because the demand should be constant and increasing, right? And so no matter if somebody's making less money, more money, whatever, and it's just some of those things. So, I found this one. And, understand this is not financial advice. This isn't telling you to go out and buy anything right now, because trust me, personally, I'm not buying anything right now. So, but this is that time, during times like this of uncertainty, volatility, what do? You research, right? You try to find stuff. You see, okay, tech is way getting beaten down. It's obviously not a great environment for you, for it. So are there some things out there that, maybe when things start to recover, maybe you look to making a little investment, look to nibble, see what you think, but do your research and have it ready to go. And so when I saw this type of investment, I said, why not? I'll go ahead and show it to you guys. So if you're getting out of it, hit the like, subscribe button. I really appreciate that, guys. And let's go ahead and get into the article I found first. And so I ran across this article in my inbox from the Daily Upside. It's a newsletter I get free every single day, so you can sign up in the link down the bottom there if you'd like to get the same kind of news. And what it talked about was, said bring on the waterworks. And I was like, H2O, water. So okay, let me go ahead and get into this. And it goes over a lot of fun facts in the article, but I wanted to give you some visuals here. So I found this right here for you. And obviously you're thinking, well, why should we have a shortage of water when, the whole globe is covered with water? Well, I didn't even realize that 97.4% of the water around the world is salt water. Only less than 3% of it is actual water we can drink. And so, you're looking at 0.30% fresh water surface. Groundwater makes up about 28% of that 3%. And then 72% is frozen in glaciers of that less than 3% fresh water we got out there. And then when you look, you got the number of people whose drinking water is provided by desalination plants, right, which is 300 million. That's not a whole lot. I mean, you think about the world here, right? Then you got over 70% of the world's water is consumed by agriculture. I know people in California know what I'm talking about when I talk about that one. And then you got the number of people who do not have direct access to drinking water, 2.1 billion. And the biggest problem we have here is the increase in the demand for consumption of water from now to 2050 is going to increase by 30%. And then you just look at the global water stress hotspots. Again, anybody who lives on the West Coast in America knows this. See northern Mexico. You look at all the circles. These are places in the world, and these are very highly populated areas, obviously, that end up having a shortage of water. And what's going to cause this water stress to get worse is the world population. It continues to grow, and you can see right here, you got by 2020, we had about 7.5 billion. 2030 supposed to have 8.5 billion, and then by 2040, almost 9 billion people in the world. And so getting into, this report coming out of the Daily Upside, you got, according to the United Nations, roughly 2.3 billion people live in water-stressed countries, a number that is expected to grow as second and third world populations surge. By some estimates, the U.S. needs to spend close to $1 trillion to upgrade its entire drinking and wastewater system from water treatment plants to distribution. And you remember this in Flint, Michigan, right? And then there was a report out of The Guardian that found that combined prices of water and sewage services soared by a stunning 80% between 2010 and 2018. In Austin, Texas, the average annual water bill rose 154% to $566 in 2010 to $1,435 in 2018, which is unbelievable. And then you just look at municipal adjustments right here, and you can see what's rising the most. Water, right? The expense for water here. And you can see this is the largest company right here, American Water. Market cap of 28 billion, and you can see the shares have done nothing but going up, notching a 700% return since their IPO, and that's through one crash, so 2 crashes actually. And so, you know, then you look at the other ones right here, which we'll kind of talk about a little bit. And then this is the company right here to keep an eye on, Evoqua, or Evoqua, however you pronounce their name right there. But they are a global water and wastewater treatment brand and one of a few publicly traded companies that plays a key role in virtually the entire water supply chain. It is also one of the only handful of companies with multiple methods of removing PFAS, long-lasting toxic industrial compounds, used in cookware, fast food wrappers, and other commercial products from water. The Biden administration recently released a PFAS mitigation plan, and some analysts believe Evoqua is well positioned to take on this work. And of course, there's eco labs, there's chemicals and stuff like that. And just FYI, if you want to get access to these kind of articles for free, just click on that link down there in the description below, put your email in, hit submit, and that is it. It's completely free, guys. No strings attached, okay? And so looking at that company's chart right here, you can see in 1 year in 2021, it returned 73%. That's not bad, but the amazing thing is, if you go back to when it crashed right here, and you go all the way through there, it goes from March 20 to December 31st, 469%. Now to compare that, look at the FANG stocks plus M here. Microsoft, same time period, 144%. Apple, same time period, 200%. Netflix, same time period, around 84%. Google, same time period, 171%. Facebook, same time period, around 124%. And what's really interesting about this company that surprised me the most was the institutional ownership, sitting at 92.94%. That is astounding, for crying out loud. I mean, that's one of the highest I've ever seen, actually. And so obviously institutions have some of the same research I'm showing you about water, and so they have invested highly in this company and many other water companies. Okay, I'm putting a lot on your radar here. And so, you know, but if you think, well, I mean, too risky. You see the sell-off happening this year because they are stocks, right? All the stocks are going down. And so, you know, but if you look at the performance coming out of those corrections, when we do finally bottom out, they seem to do pretty well, okay? And some of the others do as well. So, you know, but maybe you think, well, some of you asked me, what about some ETFs, right? Some people are looking at ETFs right now. Well, I did find 2 that did perform better than the SPY. That's usually, I mean, that's my criteria. I'm not going to invest in any ETF if it can't outperform the SPY. There's no point in that, right? Just better off buying the SPY. And so I did find 2. I'm going to give you 3. And, you know, the one I'm going to talk about the most, probably it holds this company we just talked about as well. But even that company is not even in their top 10, okay? And just looking right here, you got 3 of them. Invesco Water Resources, that's PHO, First Trust, Water, and then Invesco S&P Global Water Company. And you can see in the 1 year right there, I mean, they performed before the sell started happening. You're looking between 27 and 31% for an ETF, and that's very good for an ETF. The top 2 are the ones that actually outperform the S&P in 2020 and 2021. But looking closer here at PHO, the ticker symbol for this one, I want to see year by year over the last 5 years what it had returned. And you can see in 2017, you got a 24% return. 2018 was the disastrous year for everything, and it returned a negative 7%. And 2019 had a great year and returned 38%. And then 2020, even including the crash right there from the recovery and stuff, you end up with around 20%. And then 2021, you're looking at a whopping 32%. And then just comparing all 3, I don't even have to pull them up individually. You can see they basically follow the same line right here. But your top 2 are going to end up being ticker symbols FIW and PHO. Those are the ones that actually did outperform the SPY. And so, of course, you know, why am I doing more research in this? We'll continue to do more research in this. 1, because if you draw a line on those charts, these stocks are almost back to where they were at the beginning of 2021, right? And 2, the institutional ownership is huge. So, you know, institutional owners, usually they're going for the long term. They see this is a resource that is going to be in high demand, right? There's going to be a scarcity of it eventually. I mean, I always hear about the West Coast. The droughts keep getting worse and worse, right? Across the world. And so, and I look at other companies like, Nestle, Coke, Pepsi, some others who jumped into the water business. Why? Right? The bottled water business, because they make a killing doing that. I just went to McDonald's for lunch. They're selling bags of ice right now for like $2.50. This is in northern Florida. It's winter, but the margins are good for them. So I don't know who would want to buy ice from McDonald's. But, it's just something to look at, and it's not tech, right? So there's a chance maybe, and during rough times when tech is getting slammed, as the market starts to recover, if tech is not recovering, maybe something like this over the next 1 or 2 years will. But even the long term, if you look out, it should go up, as you saw when I showed you the article from the daily upside right there. And so that's why I'm looking at this. I'm always looking at stuff that, things we're going to need that, shouldn't be affected. Their demand shouldn't be affected by how much, whatever the economy is doing, because you always need water, right? You always need water. You need people to come get your trash. There's certain things you always have to have. And so this kind of falls into that bag of goods for me. But, let me know what you think in the comments. Like I said, if you want to have access to these kind of articles and stuff like that, 'cause they do bring some great articles. And so, of course, why am I doing more research in this? We'll continue to do more research in this. One, because if you draw a line on those charts, these stocks are almost back to where they were at the beginning of 2021, right? And two, the institutional ownership is huge. So, institutional owners, usually they're going for the long term. They see this is a resource that is going to be in high demand, right? There's going to be a scarcity of it eventually. I always hear about the West Coast. The droughts keep getting worse and worse, right? Across the world. And so, and I look at other companies like, Nestle, Coke, Pepsi, some others who jumped into the water business. Why? Right? The bottled water business, because they make a killing doing that. I just went to McDonald's for lunch. They're selling bags of ice right now for like $2.50. This is in northern Florida. It's winter, but the margins are good for them. So I don't know who would want to buy ice from McDonald's. But, it's just something to look at, and it's not tech, right? So there's a chance maybe, and during rough times when tech is getting slammed, as the market starts to recover, if tech is not recovering, maybe something like this over the next 1 or 2 years will. But even the long term, if you look out, it should go up, as you saw when I showed you the article from the daily upside right there. And so that's why I'm looking at this. I'm always looking at stuff that, things we're going to need that, shouldn't be affected. Their demand shouldn't be affected by how much, whatever the economy is doing, because you always need water, right? You always need water. You need people to come get your trash. There's certain things you always have to have. And so this kind of falls into that bag of goods for me. But, let me know what you think in the comments. Like I said, if you want to have access to these kind of articles and stuff like that, 'cause they do bring some great articles, just click on the link down below. You subscribe to the Daily Upside, put your email in, again, completely free. There's no gimmicks or anything, and they send out there's like 2 to 3 articles in it every morning. And so I like to read and stay up to date, and they do a great job at it. So let me know what you think in the comments. Hopefully you got something out of this, and I'll see you guys later.